Have you ever wondered if the silver coins or bars you hold in your hand are actually worth significantly more than what the official market price tells you? Right now, something incredibly strange and potentially historic is happening in the global silver market that could change everything you thought you knew about precious metals and wealth preservation. While the prices you see flashing in red and green on your trading screen might seem stagnant or volatile, a massive and unprecedented disconnect is growing between the digital world of paper silver and the physical reality of the metal itself. This isn't just a minor technical glitch or a temporary market fluctuation, but a structural breakdown of the entire pricing mechanism that has the world's biggest banks and sovereign mints on edge. If you want to understand why the silver in your safe might be becoming the ultimate hedge against a collapsing financial system, you need to watch every single second of this deep dive. Welcome to IE with Iftikhar, where we break down the complex and often hidden world of finance so you can stay ahead of the curve and protect your hard-earned wealth. Before we dive into the deep end of this silver mystery and uncover what the big players don't want you to know, make sure to hit that subscribe button and give this video a thumbs up. It really helps the channel grow and ensures you never miss a critical update on how to navigate these uncertain economic times. The fundamental issue that every investor must grasp lies in how silver is actually traded in the modern era, because the reality is far more complex than simple supply and demand. Most people assume the price of silver is determined by the amount of actual metal coming out of mines versus the demand from industries like electronics and solar energy. However, the vast majority of silver trading happens in the paper market through futures contracts on massive exchanges like the COMEX and the London Bullion Market Association. In this digital arena, trillions of dollars worth of silver are traded every single year, but the overwhelming majority of these contracts are settled in cash rather than actual physical metal. This means that for every 1 ounce of physical silver sitting in a secure vault, there might be hundreds of ounces of paper silver being traded back and forth digitally. This creates a massive leverage effect where the spot price is dictated by traders and algorithms who may never even see or touch a single silver bar in their entire lives. Recently, we have started to see a massive and widening divergence where the paper price is being suppressed while the physical market is screaming a completely different story. In the real world, premiums over the spot price to actually get your hands on a physical coin or bar have been hitting levels we haven't seen in decades. This is a clear and undeniable signal that the paper price is no longer reflecting the true intrinsic value of the physical asset, and a massive correction could be just around the corner. To understand why this gap is widening, we have to look at the looming supply crunch that the mainstream financial media is largely choosing to ignore today. Silver is not just a shiny metal used for jewelry, but a critical and irreplaceable industrial metal that serves as the literal backbone of the modern green energy revolution. Every single solar panel requires silver paste to function, and the global push for renewable energy is consuming this resource at an unsustainable rate. Think about the transition to electric vehicles, because an average EV uses nearly double the amount of silver that a traditional internal combustion engine vehicle does. When you add in 5G infrastructure, advanced medical equipment, and high-end electronics, the industrial demand for silver is hitting record highs year after year. On the flip side, silver mining production is struggling immensely to keep up because it is mostly produced as a byproduct of lead, zinc, and copper mining. Miners cannot simply turn up the volume on silver production just because the price goes up, since they are limited by the primary metals they are extracting. Mines are getting deeper while ore grades are declining significantly, and new mining projects take a decade or more to come online due to environmental regulations. When you combine this record-breaking industrial demand with a growing surge of interest from retail investors, you get a perfect recipe for a massive physical squeeze. We are currently witnessing physical inventories in global vaults being drained at an alarming rate that should worry every paper contract holder. If this trend continues, we are approaching a mathematical breaking point where exchange holders will eventually ask for their physical delivery, and the vaults will be empty. When the paper promise can no longer be fulfilled with physical reality, the entire price discovery mechanism breaks, and silver prices could move in a vertical direction. Here at IE with Iftikhar, we have been tracking these inventory levels with extreme precision, and the data suggests we are much closer to this tipping point than people realize. Why would the paper price stay low if the physical demand is so high, unless there are darker corners of market manipulation and institutional control at play? For decades, large bullion banks have used the paper market to manage the price of precious metals by dumping massive amounts of contracts during low-volume trading hours. This allows them to trigger stop-loss orders and force the price down even when there is no change in the physical supply of the metal. However, this game only works as long as people trust the paper promise over the physical reality of the asset. As soon as a major industrial user or sovereign nation decides they no longer trust the digital promise and demand the physical bars, the game ends. We are seeing signs of this already in the Eastern markets, where giants like India and China are importing silver at record-breaking levels. These nations are moving their wealth out of the digital dollar system and into tangible physical assets that cannot be printed or devalued by a central bank. This massive drain of silver from the west to the east is another huge factor that is hollowing out the available physical supply in London and New York. When the vaults finally run low, they won't be able to just print more silver like the Federal Reserve prints fiat currency to solve a debt crisis. You cannot manifest silver out of thin air because it must be mined, refined, and transported, which is a reality the paper market is trying to hide. As an investor, seeing this strange behavior between the two markets should be a massive wake-up call that the current spot price is an artificial construct. If you have been waiting for the perfect time to look into precious metals, understanding this disconnect is your biggest advantage in a volatile world. As we look toward the future, the implications of this silver disconnect are nothing short of profound for every person holding hard assets. If you are holding physical silver in your own possession, you are holding a private insurance policy against a global financial system built on digital debt. The paper silver market is essentially a giant high-stakes game of musical chairs, and the music is starting to glitch as the physical supply vanishes. When the world finally wakes up to the fact that there isn't enough physical silver to satisfy the paper, claims those holding the actual metal will be in control. This isn't just about trying to make a quick profit, but about a fundamental shift from an era of digital illusions back to an era of tangible value. We are living through a unique period in history where the real economy made of atoms and physical resources is finally starting to reassert its dominance. This transition is usually volatile, but for those who are prepared, it represents an incredible opportunity to safeguard their financial destiny. If you found this deep dive into the silver markets helpful and want to see more analysis on how to protect your family's future, please leave a comment below. I read every single one of them and want to know your perspective on whether the banks can find a way to keep the lid on the price. Don't forget to share this video with your friends and family or anyone who is looking for a way to safeguard their financial future in these times. Your engagement is what allows us to keep bringing you this level of research and insight every week. Thank you so much for spending your time with Iftikhar today, and I hope you stay vigilant and informed. I look forward to seeing you in the next video as we continue to track this historic shift in the global markets. Since silver is a byproduct of other metals, do you want me to add a few more sentences about the specific copper and zinc mines that are closing down to extend the length further?